Buyurun Erol Bey.
Hello to everyone. This is our Istanbul Aydın University, another blockchain talks webinar. And today we have a distinguished businessman, I would say blockchain architect, Mr. Mukhtar Musabeto. And he really did a very big favor for us because of the time difference. It's very early. So therefore, I'm saying to you, good morning, Mukhtar.
Good morning, everyone. Merhaba.
Merhaba. And we are ready to listen to your valuable information and ideas on blockchain entrepreneurship. The floor is yours.
Thank you very much, Errol. Very nice to meet you. And I just wanted to summarize my last 6 years experience in the blockchain space. And while, you can hear a lot of, people talking about future with blockchain, how many bad, good things it can bring to our lives. I would, today, I would probably prefer to focus on things we need to take care first. And it is related to blockchain industry, to start creating companies, to any basically founders and executives. And in the last 6 years, what I've been doing in this space, I was advising my clients as a blockchain advisor on many things. Starting with simply defining strategy, ecosystem framework, and many other things that comes with probably almost any startup. But at the same time, there's a difference between any technological startup, if you say so, and blockchain, because we are moving to a different age, and it is literally what is happening today. So if I'm, do I have an option to share my screen? Oh, okay.
Yes,
Here,
of course.
I found it. Yeah? Okay, great. Thanks. It says host disabled participant screen sharing.
Could you try that again, please?
Okay. Can you see it?
Perfect.
Can you see this PowerPoint?
Yes, it's perfect.
Okay. Yeah, great. So basically, I would like to focus on 3 main layers that should success or failure of any blockchain or crypto startup. And first one is fundamental, which is about Austrian economics. And I will give more details between difference between Austrian economics and the reality we live today. Second one is dynamic, which means we are in this age, we are one single technology we can develop independently, but we are facing convergence, huge convergence of multiple concepts and technologies at the same time. And we cannot ignore development of other technologies, but because they're linked. And third layer is distributed, which is the nature of ledger technology, and especially with encrypted value data like a cryptocurrency. There are more layers and the factors to consider depending on the nature and scope of a specific blockchain project. So what is the deal with Austrian economics? And here is the core difference between Austrian economics and Keynesian, which we're using today, even we don't realize it clearly, but that's what was what is taught in all universities, and that is how Wall Street and the whole financial and economic works today. So, and I just try to just pull some core differences, which includes economic drivers, role of government in economy, money, and inflation versus deflation. So Austrians believe social element play equal important roles in understanding prices, market movement, as well as money and value creation. So basically, what Austrians are saying that beyond all of this, beyond point, which actually relies more on aggregate demand, consumer demand, which includes household, businesses, governments, important driving force in an economy. Nations and further and just also estimate what is our perception of prices, of market movements, and money and value. And a second core difference is the role of the government. While believes that government must interfere economy with rules, regulations, and other things when it goes to downturn or grows too high, Austrians believe economy is a natural sort of living body, living organism that should go through all processes that it faces in a natural way. So if something goes wrong, no one should. And I will give you later examples of how it worked for us and what was the implications of Keynesian economy on our lives. Third is in a perception of money. While Keynesians perceive money that is issued by government and not backed by a hard asset like gold or some other hard asset, in previous centuries, Austrians have this sort of sound money definition that refers to maintaining a currency that is not prone to sudden appreciation or depreciation. And that's also relates to inflation. And the fourth, difference between Austrian and Keynesian economic models is that Austrians believe that inflation, as a result of the increase in the money supply, is harmful. And deflation is good, as price reductions is a result of productivity improvements made through the investment of savings. So basically what Austrians is saying is that if inflation is very harmful for the most people, especially if they are low income, so they basically live from paycheck and they cannot actually afford any investments. And basically what they earn, they spend immediately on their immediate needs. At the same time, deflation helps people to save money and then invest them in overall improve economic basis. At the same time, what we see what Keynesians are saying and how it works in our reality is that a steady rate of modest inflation is good for growing attractive to people. Increase in borrowing, in turn, encourages consumer spending and therefore stimulates aggregate demand. And I will go to more details later. Another layer, as I mentioned, it's a convergence of multiple concepts and texts. First one is offshore zones. So blockchain actually adopted relatively relaxed regulation and usually outside exists outside of national borders. Crowdfunding, where small amounts can be raised from a large crowd, and that's how it, how this crypto market is actually funded. Then there's an old, probably forgotten concept of penny stock, which is and people just put small amounts, can put small amounts and speculate on growing prices. IPO, which was inaccessible for individuals unless you are high worth, and so it's investment in cryptocurrency like a regular public investment and available for individuals without any middleman and without any restrictions or necessity to obtain special investment license. And it also acts as a seed capital, so high risk investments, but available for investors, sharing economy, assets shared between private individuals for fee or free, typically via online, open source. So basically most of the blockchains today are open source, so you can see like and how it was designed and how it was managed and what is happening with the whole platform, framework, or app. And it's network-based framework, platform, or app, which is a piece of software that connects users with other members of community to create mutually beneficial opportunities. And it's decentralized finance. It's a fintech concept that removes control banks and institutions have on their financial products and the financial services in general. And Web3, which is anyone can read, write, trust, and have a higher data security, scalability, and privacy for. Then the third layer is a distributed technology with an encrypted value data, which is about, it has some distinctive factors here, like blockchain, which is a distributed ledger technology. And what we see today, it's either a framework, platform, or dApp, token added to the system. Cryptocurrencies and tokens are an encrypted value data monitored and organized by peer-to-peer network rather than by a centralized authority. So as soon as independent currency is or added to a business model, it becomes an economic model. So this is one of the points that most blockchain founders and executives actually struggle to understand. That there's if you start, no more business model, it's economic model, because if you introduce new independent currencies or use even existing currencies like Ether, Bitcoin, or others, you actually create economic model. So without making any economic assumptions, simply business model is not going to work. So this is about, and I want to just talk more, focus more on economics, because many people would probably argue and say that this is a philosophy and it is too far from reality, and it does not work in real life, including business environment. But and who launched several startups successfully, and I'm very practical when it comes to business. So, and I will not agree with that point, and here's why. So, while working closely with blockchain founders and executives, and for the last 6 years, I made my own journey by digging deep into the nature of blockchain as a concept and as a technology, and then changing my Keynesian mind to what I'm saying today. We have been living in the economic reality built on Keynesian theory for almost a century. It's like since probably 1936 when Keynes theory and then it was actually taken for heavy use by all governments around the world. The theory is so deeply rooted in our minds, lives, businesses, that we do not even sometimes realize, causing more pain and uncertainties and joy and confidence. So basically, to give you some examples how it works as a pain, it's just when, for instance, any national economy growth slows down, face recession or crisis, central banks start printing money and lower interest rates to jumpstart struggling economies, and we end up with inflation sometimes too high for some people to survive or bear. And and give you another example of how Keynesian economy is actually makes economic uncertainty even heavier. Is just I found I was reading a report developed by some research group, which actually was analyzing one Amazon warehouse in UK, which was destroying 130,000 items every week. It is more profitable for Amazon to throw them out than to sell. And this is a direct impact of Keynesian way of thinking, because the whole idea of Keynesian economy is that governments must consumer behavior to buy more and more and more. So this is this was taken into was considered by corporations as a way to go. So in order to satisfy everyone's growing needs, stimulated needs in whatever they need, they just produce more stuff, which we may not even need. At the same time, I mean, so basically when you Amazon warehouse just dumps 130,000 items per week, you can think that you can imagine how much resources, including materials, energy, labor, was spent for production, delivery, and just simply processing this whole process, whole thing from raw material to products that someone can buy. And what we see today as a wasting of this wasting, it's not just was dumped and then it's actually shipped into some tankers and then sent somewhere to like the Philippines, and then it is just abandoned on an island, or just this tanker with all this garbage just stays on a coastal in coastal areas, but in polluting the whole area. And I know that Turkey is also in this sort of business where where Europe ship their garbage to Turkey for utilization. So and then when Turkish companies start processing this garbage, there is an environmental impact to the area where this utilization actually is happening. Today, just look at what is happening with prices for oil, food, and gas. And basically, this is the resources that we use to produce and then dump a lot of stuff. So this is just gives you a very simple and basic example why Keynesian economy is not working anymore for nations, for the whole global economy. And what we need to do, we need to think about something different and change our mindset. So from practical point, I don't see economics and especially Austrian economics as a philosophy anymore. I see it as a mindset, as a practical mindset. Should think about what we are doing, really doing. To give you another example is in 2020, 10 largest retailers went bankrupt, including giants like Sears, JCPenney, Toys R Us, Circuit City, Neiman Marcus, Asana Retail Group, Tailored Brands, and others. So basically, what it shows that why these retailers do not survive. If you have any experiences, going to Sears or JCPenney, they were selling a lot of garbage. I don't know. Even today, when I go to Walmart and other giants, global retail giants, I see a lot of garbage things that actually are not. There's no benefit of, or it's just like a micromanagement of household. So basically, what I'm saying is that we need to change the way of thinking and how resources and how we value resources we have, and how this can in changing this mindset can bring us. And at the end, so when you compare, there's many other factors. These two economic series can be compared. And these four core differences I mentioned, this is just the tip of an iceberg. So if you go deep to Austrian economics, you will see a lot of other things that would probably help to change. And if you boil down all core differences between the Keynesian economic model and Austrian economic model, Austrian economic model is about creating a decentralized, and this is a difference with Keynesian economy, which is actually relies on centralized economy. And we know what is happening with a centralized economy, for instance, take for instance this global financial crisis that happened in 2007, 2008, and this principle "too big to fail" was introduced in order to actually justify bailing out large corporations who failed to perform and efficiently on the global market. So instead of letting them die and so eliminate this all type of thinking, all type of structures, and all business models, government actually let them stay on the global market, and by doing just we're trying just to save all dead woods and trees. They actually prevented evolution of the whole system. And what I'm talking about for instance, fintech industry. So, its first signs that fintech will bring a lot of good was early this century. But then after the crisis, it was a huge delay in the growth and evolution of this fintech industry. But to give you some example how these new trends can help us to move forward faster for a better future, for prosperity, is just one single fact that from 2012 to 2017, fintech industry alone 20% of global retail market, global retail banking market. That's, this is so for 5 years, just small and unknown and say completely new in strange industry takes 20% of was built for hundreds of years. So this is how you can compare the way government handled global financial crisis in 2007 and how it prevented moving forward of business with new economic models and with new way of thinking. So if governments keep doing the same thing, well, we will keep struggling, and we will keep facing inflation. And I know it's a huge problem and we will face a lot of other challenges, especially for low-income people who barely survive. And it's not a secret that quarter of US population now sitting on food stamps. So basically they cannot afford to buy food, and they go to food banks to get these stamps and go to supermarket and buy something, or trade it for some food. So this is a just brief view of how blockchain is here. I mean, in terms of, it's not just all of these technologies we see today, whether it's blockchain, artificial intelligence, or machine learning, or any other new trends, they are coming to solve our problems. And what we need to do as people, we need to change our minds. The foundation, the very basic foundation we need to change is economic model. Keynesian economy proved to be already dead. So if we just keep this dead body in our lives, we're not going to move to prosperity. We will keep going. We will keep raising this inflation, bring a lot, hunger today already, because people in Europe and some European countries cannot afford to buy enough food for them, and they cannot afford to pay for heating, for hot water, and this is how our world is reacting to government actions that are not doing enough to change how this global economy operates. Briefly, what I wanted to deliver to your audience. So, and this is how the whole economic model, global economic model, and national economic models are deeply and strongly connected to entrepreneurship, and especially if someone is thinking about launching blockchain startup integrated with cryptocurrency or any token, whatever it is. The first thing that needs to be done is to change your own mind before you start. And I can give you an example. Just a couple of weeks ago, I actually had a conversation with two executives of a new blockchain startup that was launched a couple of years ago. And basically before meeting, I just went to online and just checked their token price and their white paper, and I made up my own conclusion and started talking to them. Because I know that people don't get with economic models and don't like it, and think that there's no connection between economic models and specific blockchain startup or product. I started again as today in this presentation. This is my presentation. Started with comparing differences between Austrian and Keynesian economic models. And the CEO of that company stopped me and said, "Look, we don't need a theory. Tell us how you can increase price of our token." And I said, "Okay, let me ask you some questions to you have, because what I see from market, your token dropped probably 50 times since it was launched. So I want to know, why is this, how the token, and then how, if anyone in the company actually tracks changes in prices since it was launched." So first question when I asked the CEO, how did you came up with a 20 cent per year token. And there was a complete silence. And then it was kind of awkward situation when another executive, who is a vice president, started talking and said, well, this guy, CEO, our CEO was not involved in setting up price for token. And I wasn't too, but I know how it was done. And I said, okay, so how it was done? He said, well, we went to investors and asked them what would be the price they would buy their token. And then the blockchain founders who already launched their tokens and asked them how did they set up their own prices. So after collecting this information, they set up it at level of 15 cents per token. And my next question was, okay, so how do you offer any token price to early investors? How did you start even this conversation about pricing? Said, this is just their experience, and that's what we relied on. I said, look, when you set price for any product or service, you always take into account, consider several important factors. First is cost, right? Cost consists of materials, resources, labor, and other things, and then you expect certain margin. So what was the economic foundation for setting your initial token price? His answer was amazing. He said, I'm an economist. Don't teach me economic basics. So basically, I asked him, okay, so should I assume that set in speculative manner? He said, no, it was a market. So you can clearly see how Keynesian way of thinking affects his mind when it comes to setting up a token price. He basically goes to speculate, which is actually what Keynesian economy is supporting, encouraging. And this is a huge difference. This is why this Keynesian economic model is not going to work with blockchain. Is not going to work with decentralized economic models. And another example to give you, a real life example to give you on what successful blockchain founders think about pricing was a few years ago, and I believe most of you know Vitalik Buterin, who is actually came up with Ethereum idea, and he's a founder and he's leading this project. A few years ago, when the Ethereum price is all other major cryptocurrencies started growing exponentially, he actually stepped up and said, I do not encourage such a high price rise. I want to stop it. I want to make it stable. And in order to prove that it was his sincere point, he even sold his own, not all of them, but quite a large portion. So basically what he was stating by talking about stability in the crypto market is that he needs a stable environment in order. In his case, it's a framework. In many other cases, we're talking about platforms and decentralized apps. So basically, that's a perception of a founder of the most successful blockchain framework. And this is the second biggest cryptocurrency in the world after Bitcoin. And Vitalik Buterin is not just a founder. He must be respected for building such a comprehensive, strong, solid framework that allows many other blockchain startups to build something on top of it. So basically, he's not created just a new currency. He does not just became a billionaire and happy with that. He wants to continue it. He wants to continue ecosystem. He wants to continue to develop for users of Ethereum. So it's not just a currency. So currency for him is a tool for funding and for keeping system running, not for speculation. What we see with 99% of founders and CEOs, they jump to speculation. So this is a stark difference between Vitalik Buterin and these two guys I talked a couple of weeks ago. And this is the same set of mentalities for most blockchain startups and founders and CEOs and in general executives that I saw for last. They all like guys in gold rush with pickaxes just to go and dig some gold while there is a opportunity. But blockchain world in that way. The way it works is you can just take Vitalik Buterin as a role model for building a blockchain organization. And so this is for today. I wanted to deliver to your audience and share my thoughts and my experience and my view on the whole blockchain industry and what that be a true blockchain startup, to be true blockchain founder.
Thank you very much. Before you finish, I would like to get some comments also for the last week's crypto market crash. And again, stand up. But I think what you try to explain to us with the last example, if the people tries to do the speculation side on the using the blockchain technology, the results will be really very meaningful in a greedy way. So
yeah, well, basically the very simple explanation why there's in the crypto market is very, very simple, truly. Everyone can go online and see how Bitcoin grew. Yeah. So when it goes and the token price goes to spike, it means, and then when it goes down and gets some certain level of stability, it means it's a level of adoption of cryptocurrency. It means how many businesses and people actually using this token for whatever reason, to buy something or to invest or to just simply save. But when we see spikes, it means that we see a lot of rapid investments like Elon Musk did ago when he said, well, I'm going to buy Bitcoin, I'm going to buy this token. It's just there was a high spike. Yeah. So that's what is happening. So basically what you need to watch on the market is what are drivers for growth. It's just a single celebrity saying that he's going to buy something, to buy some tokens. Just ignore it. The bottom of the price is when it stays stable at a certain point. So now it's around 27. It will drop further significantly. So it's more or less stable price. Then the point is, what are you going to do with Bitcoin at this, if you buy at this price? Are you going to invest? You hold it. So then we have different groups of people who own Bitcoin. For instance, some people use it to invest in crypto projects, which will grow into, you will trade it for another tokens, which means that you have some beliefs that other tokens or some other projects will grow faster, which means high risk investment, like a seed capital. Then you have people who prefer, just and see if they will grow over 1 year, 2 year, or 3 year. And then there is some highly speculative groups who just want to buy a lot and see what happens in next month.
So, I mean, the last news that I just read before we start our webinar, Elon Musk, who intended to buy Twitter, he now is claiming that he will not buy. So it's another, I think, market crash.
Yeah.
Somewhere.
Yeah, it may kill Twitter, actually.
Yes, it might. Mr. Takao, do you have any question to Mr. Mukhtar?
Actually, thank you so much, Mr. Mukhtar, to actually join us this meeting today. And I have no questions. I just delightfully listened to you, and thank you again.
Yeah,
That's
thank
it.
you for having me.
Okay,
My
Mukhtar, first of all, I'm very thankful for your participation at a very early in the morning time in Canada. And
Yeah, that's okay. Yeah.
And also, we are very thankful as the Blockchain Academy of Istanbul Aydın University to be one of our guests, valuable guests at our
Thank you.
webinars. We hope, as a member of the academy, to see you, to know you also in person in the future. Thank you for
Absolutely.
your
Yeah, I have some plans to go to Turkey. I've been there many times. In Istanbul, I was negotiating a lot of oil and gas deals on behalf of Kazakh government. And I've been, on vacations too, like Fethiye, Antalya, and other places. Very beautiful. I like in general some industries in Turkey, like agriculture. The big difference in Turkish agriculture, it consists mostly of small farmers, and small farmers actually is a good field to use blockchain in order to raise their margins. So what small farmers always actually struggle with is just to sell their produce at higher price, because in that industry, middlemen, brokers who actually buy, they have upper hand. They actually make most of the money, most of the profit in the agricultural business. So the way a blockchain can help Turkish agricultural sector, and especially farmers, that if they put on their produce, so they can sell it at fixed price, they can put it for bidding, they can basically even sell futures to directly to customers, directly to consumers. And this small produce bazaars in Turkish cities is a great example of decentralization too, because even on an emotional point, when you see farmers selling you these vegetables and fruits, going to a supermarket and buy something, you don't know where it was grown, who did it, and without even personal contact with the producer. So I believe blockchain has a great potential for Turkish agricultural sector, and it means that giving opportunity for farmers to make more money on their produce will lead for better equipment, less manual labor for them, better processing food, and higher quality food. And that's what we need. We don't need a middleman, which is again about Keynes. We need more producers. So that way we can keep prices lower than we have today. It's like a gas price. When you go to Russia, you can sign up fixed contract with 400 euro 1,000 square cubic. But at the same time, spot prices are now 1,200 euro on the market. So you can see that these traders or middlemen take 2 times of the original price. And that's what kills us. That's what middlemen who are actually part of Keynesian economic theory is doing to national economies. And we need to.
Thank you very much for valuable comments.
Yeah.
Mukhtar.
You're welcome.
It is really very nice to listen to your ideas and comments.
Thank you so much.
We will hope we will see you in person, as I told you. We will be also honored to show our university and our facilities. And, you know, really, we are, in, as you said, with the Blockchain Academy, we are trying not to change the world, we are trying to change the mindset of the people. Thank you very much.
Thank you very much for having me, and good luck, and very nice to meet you. I hope, yeah, we can continue our communications and exchange ideas, and who knows where we can end up.
Sure. Thank you very much.
Thank you. Bye.
Thank you. Bye-bye.